Alright, okay, good evening everyone. So welcome to today's stream. As usual, we'll run through the markets over here, okay, highlight some of the opportunities and of course key pairs to take note for the week. And then after that, we'll see if you guys have any questions. Feel free to put it into the chat. I'll be keeping a close watch on that as well, and of course, answer as many questions as we can for this session. Okay. So last week has been pretty kind of like average, I would say. There are two trades for myself. One resulted in a stop loss, and the other one resulted in a full take profit, which returns net about 0.8 R. If you actually hold on to it, you actually would gain a little bit more, I would say, because on the euro dollar, the eventual target went on to hit a full 2R. And then, of course, we also have gold, which I did not manage to get involved on that. But for those of you who managed to get involved in it on Friday, actually was a full take profit as well. Okay. So we did had a event that happened last Friday, where of course resulted in the dollar weakness. Okay, and we'll take a look at that on this week and see what we are looking out for moving forward. Okay, especially with that impulsive move from the dollar, pretty great. Okay, because it kind of aligned with some of our expectations that we have been building in since last week. Okay, so let's start off with the dollar index over here. Okay, so as you can see, very quickly bring this up. This was the move on Friday, very impulsive. And again, nothing surprising because we have been expecting eventually dollar would make another bearish move to retest this swing low, right? And essentially last week when we're looking at bullish buys on dollar, we have kind of highlighted it's basically a short-term expectation. We're basically just expecting the dollar to pull back, and then the overall directional bias is still basically bearish. Okay, so this was the pullback. If you ignore the wick, right, which on TradingView the dollar index had a wick, but if you look at some of the major pairs, we don't really get that wick. So you want to ignore this entire huge kind of wick or shadow, right? And if you take a look at it based on just this high here, um, the move on Friday prior to the impulsive down move, you can see it's a very nice little fake break to the upside, right? So in SMC model, it's basically a liquidity sweep. So with that, this week here, obviously, if we can get some sort of a corrective pullback, and as long as price remains below that swing high at 98.80, we will expect the dollar to continue to weaken, right? With a target towards the 97.1 area. Okay, so that's what we'll be looking at. Bearish bias on the dollar for the week, right? So any sort of a corrective pullback would be seen as a potential sell opportunity on dollar. So again, if you go over to the euro, okay, so the bias here would then be the inverse of things, right? We'll be looking at bullish bias on euro. Pretty much the opposite. You can see this impulsive leg. If we can get a corrective pullback, then obviously that will open up a buy setup. What I like about this, you can see is that this swing low here has also been tested and kind of fake break, right? So in SMC model, that's your liquidity sweep. Very nice, right? And then the market, of course, just inverse back up. So today I did not put in any setup here on the euro or even the pound. Okay, but essentially this two pair you want to keep an eye on for the week, right? For me here, I'm just giving it a couple of days, maybe by Wednesday. We might get something set up after I give it sufficient time to develop the corrective move. Okay. In fact, if you take a look at what we have as of today, right? It's starting to show a little bit sign of a corrective already. So this one here is a good opportunity to talk about expectation as well, right? In a way, if we want the move, we want the pullback to come towards our entry point in a corrective fashion, which means it shouldn't be fast. We need to be having that expectation of time, right? In a way, if I'll just put in the fib, right? So suppose the setup here is I'll focus on 67, right? The idea of this expectation is important because psychologically it gives you that planning where you wouldn't be too, I would say, FOMO into putting a setup, right? Because if today price just decides to pull back all the way, right, within a single day, naturally price needs to pull back pretty fast, pretty sharp, right? And that would then result in some sort of a V-shaped formation. That's not the ideal setup that we want. Okay, now what we want for the setup here is for this pullback to be corrective in nature, which means that it needs time. Right. So with that expectation, this morning we know that, all right, the pullback shouldn't complete today, right? Because if it completes today, again, it means that it's fast, it's a V shape. Um, that's not what we want. Okay, so that's the reason why I did not put in any pending, or did not really share this setup, in today's email. But you can see moving forward, right? If this is just going to correctively pull back like that, then the setup may come to us on Wednesday, right? So that's what I mean by the expectation and how that actually helps from a psychological point of view as well, right? You don't need to be rushing things through. You know that it needs time, and therefore you let time prove that for you, right? You let time be the confirmation you need for the setup itself. Okay, so that's on euro, and of course, pretty similar here is the pound, right? Where we are bullish buyers, of course, you can see we have this V-shaped formation, and then the pullback also managed to successfully provide a liquidity sweep, and then of course a very, very impulsive bounce to the upside. So same thing here, right? If you go down to the hourly, we'll just be waiting for that pullback as a corrective move. That would then give us a setup to look for the buy. Okay, and then of course, if euro dollar and the pound dollar both gave us a setup, that's where the risk exposure kind of conversation comes in as well, where you do not likely want to just take both with the same risk structure, because then you'll be exposing in the dollar twice. That's where your risk exposure management comes in. All right, so that's on the pound and the euro. Definitely something keep an eye on for this week, because I think there's a very high possibility we'll get that set up for the buy. Okay. Aussie dollar kind of had an impulsive bounce as well, but I'm actually a little bit more onto the neutral side of things, because the context of this overall trade and structure is slightly different from the pound and the euro, right? So the context of this is that you can see prior to this bounce, right, where or what is the pattern that was developing. This was a bearish move prior to that impulsive bounce. Okay, now very, very quickly I just bring you back to the pound. Before that bounce, what was the prior move on pound dollar? It was a bullish move, right? Aussie was a bearish move, right? So that's what we meant by context, right? If you take things in isolation, then it's the same, right? It's a bullish move to the upside. But if you look at it from a context perspective, I'm not too comfortable in buying the Aussie, because overall it seems to suggest that this can just be a pullback, and from there maybe a crawl, and then the market will start to reverse back down, right? So that's also a very, very high possibility, because this is still technically in a bearish structure. All right. So with that said, Aussie dollar here this week, likely we're gonna be more of a neutral point of view and really see how price is gonna develop further from here on. Okay, if you're gonna buy, we need to definitely see price break above this high to give us the extra confirmation that the structure is turning bullish, right? Until then, I'll be very, very careful in buying in the Aussie. Okay, not technically a sell yet. Just I would say just leave it for now, because I think this week Aussie dollar may not give us something very clear. Okay, then we have the dollar Canadian. So dollar Canadian over here right now, I'm looking at short-term pullback. That's the expectation. Now, whether this pullback would just be a simple 1, 2, 3, stop here and then reverse back up, or the 3 wave is likely going to continue lower to retest this low. At this very moment, to be very honest, isn't important, right? Because again, put things into perspective for you. If you get a corrective move here, we're likely gonna look to sell. Now, whether we're gonna look to sell and take profit here, take profit here, or take profit here, not the most important aspect, right? Because that's just basically how you're gonna manage that profitable trade. Whether you're gonna trail it, take partial profits, here or here, or just exit fully here, it's perfectly fine as well. Okay, so the important element on this is really to understand that we are looking to sell the dollar Canadian this week, not because it's a downtrend, but because we're expecting some sort of a pullback. That's about it, right? I mean, the overall structure is still bullish. You can see that's very, very obvious. We are just capitalizing on the pullback, which give us some clue based on this impulsive move that the market may be pulling back right now. Okay, so what does it mean, right? Because if it's going to be a pullback trade, then obviously our management needs to be a little bit more active. It's not a pro trend, it's basically a pullback retracement, right? So you want to actively manage that trade. So yeah, that's one here. Again, if you go down to a lower time frame, very, very similar principle to the euro dollar and the pound dollar. You want the market to pull back correctively to give us that setup. Okay, so I think dollar Canadian is something worth noting as well, right? I've kind of flagged them. These are the pairs that you want to pay a little bit more attention for the week. Okay, then we have dollar yen, which is very, very similar here as well. I think dollar yen, if you still recall last week, we did mention on this pair as well, where we expect this high to be broken, right? Because that would give you the expanding flat structure, one of the pattern in Elliott wave principles. Okay, so very, very nice here where the market actually develop into the expectation, right? So I kind of shared this framework before as well. The beauty about Elliott wave is that it allows you to forecast the market based on these certain patterns that the market tend to form. And as a trader, your role is to basically wait for the confirmation, right? In a way, if the market develops into what you expect, right, which means it's aligned with your expectation, and that's where you're gonna get a trade, right? That's where you're gonna get, may not be necessary immediately kind of execution into a trade, but basically when it starts to develop into what you expect, then great, right? You get that confirmation that you're looking for, and then the next step is then look for the execution, right? So dollar yen here essentially is forming that at this very moment, right? I mean, we don't have a setup immediately right now, but this is the pattern that we have anticipated. This is the pattern that the market is currently showing sign that is developing, right? So if I kind of update this very, very quickly, this would be our new invalidation point. And if the market can pull back correctively, right? So if I can put in a fib here, let's say the key level was between the 50 and 618. If the market can pull back in 3-wave, right, towards the zone, naturally that's going to present an opportunity to look into the sell, right? So same thing here. If you go down to the hourly on the dollar yen, right, what we would love to see, of course, right, is for the price to come down, goes back up, not too impulsively. Some confluence here as well in 3-wave. That would be great. This is a huge fair value gap. Naturally, that's our point of interest. Okay, of course, to be more specific, we always pull in the fib. And on the lower time frame, our entry zone is going to be the 67, right? Now, whether the market eventually is going to pull back towards there, or if it's just going to do something like that, kind of like miss the 67 a little bit and then bounce. It's part of trading, right? We're not gonna be perfect all the time, but for me, the key here is I'm just gonna stick to the 67, right? Sometimes we'll miss the entry so bit, but sometimes I would say, if you start to move your entry lower and lower for yourself, then at what point are you gonna stop, right? So that's the part about being disciplined. I would always stick, my entry there. If the price doesn't retrace all the way to my entry zone and then start to move in the direction, so be it, right? I might have another opportunity. I'll just look for the next setup. Okay, so dollar yen definitely something worth noting as well, right? So most of these major pairs are potential opportunities for the week. Okay, so keep an eye on them. Then we have gold. Okay, so gold is where last week, again, the context of last week's expectation was the move up, okay, the bounce up. And again, we are looking at short-term retracement trade last week, right? Why? Is because we have this as a crop, right? It's a bullish move. This is essentially what we're looking at, okay? Either this move continue lower or not, we don't know, right? But essentially last week we were expecting some sort of a pullback as a short-term move because of the crop, right? And we got that move on Friday, right? And this was a trade that I didn't manage to get involved in because price didn't tag in into my entry. But I'll show you in a while on the lower time frame, right? The setup essentially is the same. It's something that's repeatable. It's just that I kind of took away that entry for myself, that pending order, simply because price came very, very close to my entry and then started to give some sort of reaction. So I thought, okay, I've missed the bone, and then therefore I just canceled the order, right? So I mean, if you did not manage to catch it, so be it. Look at the next trade opportunity, right? You don't want to chase things at where it is right now. Now, for this week's, the outlook on gold here is I'm just going to maintain a neutral point of view at this moment. The reason for that is very, very straightforward. Okay, now we have a short-term impulsive push on Friday, but that doesn't necessarily mean price will immediately keep going higher. There are a couple of things that price can develop into, because what we have right now is this high hasn't been taken out, and we have this low established. So essentially, we are in the midway point of these two swing points. Okay, in other words, we are in no man's land, right? Because what can happen over here, as I mentioned, this can come back down, form a three-wave move, and then continue upside with this as the swing low. Alternatively, what can happen is this can come down from a correction and continue to push lower to complete this channel. Okay, now if price were to be expected to say continue higher, we'll want to see some sort of a correction here first, okay, for that push up. Even with a correction, it may just be a double top and then reverse. Okay, so what is the final confirmation to say price is likely going to go higher is that it needs to take out this invalidation. If it doesn't take out that swing high, there's still the odds where price can still go lower. Okay, so I'm just going to be very, very cautious on gold this week. Okay, I'm probably not going to rush things through. Anyway, we have other things that we can look out for in terms of the trade setup. Okay, so very, very quickly, let me bring you down to the lower time frame to talk about the setup, right? Which is here, okay, on the hourly. Okay, so last week what we had was we have this low taken out. Okay, price reverses. We have this high taken out as well. Of course, on the lower time frame, that's what we call liquidity, straight change of character, as well as a confluence on the higher time frame where we have this crop. Okay, so we have the context, that alignment. Okay, that short-term market is likely going to go higher. We have the principle of tree where we have this first move up. If this is going to be correction, we can expect one more push. Whether this push was going to be impulsive or not, we don't know. But obviously on Friday, it was an impulsive move. And of course, the FIB comes in here from swing low to swing high. You can see where that 6167 is. Okay. The initial setup, or I would say initial pending order that I had was here, right? That's where you can see, as I mentioned, price came very close, didn't tag me, went up, get very close to our target, and then after that, it came back on Friday where I already canceled that pending order because of this move. Okay, again, if you manage to take this trade, congrats, right? Very, very simple trade. Pretty much, tag you in and immediately went into target. But if you can't miss that, it's fine, right? We're just gonna look for the next trade setup. Okay, so that's on gold. Pretty straightforward as of now. Probably just be patient. Silver is slightly different from gold, right? You can see that silver here I'm expecting upside. Okay, we got the nice little break here as well. So again, the context of silver and gold is very different. Okay, so silver here, if you go down to the lower time frame, we may get a setup as well for the week. Okay, obviously this FIPS needs to be readjusted. But you can see it's a very, very clear bullish structure, right? So where would be the invalidation? It's going to be somewhere here. Okay, let me just pick the right tool here. Okay, so that will be the hourly invalidation. The thing here is we'll just need to wait for the corrective pullback, and then we can look for the entry to get involved in it. Right? So we put that FIPS in somewhere there, okay, which we have a little bit of a confluence on the left, right? So again, why I'm not putting in that pending order today is really because, as I mentioned, on euro and on the pound dollar, I want to see a corrective pullback, not a fast impulsive move. Okay, so silver, something to keep an eye on as well for the week. Crude oil, right now here we are expecting crude oil to pull back. Obviously it's doing its pullback right now, right? It's starting to do that. But the move up here is currently not impulsive. Price hasn't really broke any of that previous highs as well, so I'm not too eager to look for that short-term buy at this moment, right? Again, context coming in. I'll just be patient on this for now. Okay, so nothing really much on that. S&P 500, definitely still bullish on this. You can see that we had a nice little bounce at 50%. So yeah, I mean, any corrective pullback on the S&P naturally is still a buy opportunity. Okay, so keep eye on that. I'm not actively trading the S&P index. I do have a US stock portfolio, but those are more on the investment portfolio, not so much of a trading. So S&P here, I'm not really actively kind of like looking for trades as well, right? But just to share the overall direction on the index, is still bullish. Okay. Then we have the pound yen. Pound yen here is pretty clear in terms of the directional focus, right? I'm interested in the upside. We can also see that this pullback so far has been very corrective in nature. So that's something kind of like adding confluence and confirmation that we may see more upside as well. And of course, the key level is here, right? The 58,618. So this one here, just need to give it a bit more time. When price actually tag the zone, that's where you can start to go down to the lower time frame and look for that setup, okay, and the entry model to get involved in it. Okay, of course, some of you may have different setups that you utilize. So pay attention to the point of interest, the key areas. When price gets involved in that, that's where you pay a little bit more attention to the trade. Okay, then we have Aussie yen. So Aussie yen last week started to make a nice little bounce off the low. That led me to believe that the low has been established. And we're basically just waiting for that corrective pullback to look for entry, right? So this low here, you can also see some confluences from the channel, obviously, right? You also have the perspective of this as a 1, 2, 3 pullback, 1, 2, 3, right? So the tree wave internal versus the bigger tree wave can be seen as completed as well, and then we get a nice impulsive leg, right? So if a correction is to establish here, we're definitely expecting more upside. And this upside here may have the chance of breaking or retesting all the way at the top of this, right? So there's a lot of upside potential that we can really look into. Okay, so I would say Aussie yen would also be a potential watch list, right? So this week you can see there really a lot. Okay, and then of course we have pound odd, right? So pound odd here, we had a nice impulsive leg. The market right now is pulling back. So the expectation again is a very, very simple tree wave. Okay, so if we kind of adjust this a little bit, right? As the market continue to pull back again, sometimes I don't like to put in FIPS too early because we need to keep adjusting that, right? I always like to give the market some time to prove that, yeah, it's starting to pull back. Then only we start to measure it. But the whole idea of this is pretty straightforward, right? This is first leg, pretty impulsive. If you can get a correction, we can expect one more to complete the three-wave pullback, right? So short term, we can capitalize on this move. Okay, yeah, very simple principle. You tend to see me repeat this from time to time, right? Because that's how we're looking at it anyway. Yeah, so again, pound odd, this morning I did put in a pending order, but very likely we need to do a slight adjustment on that. Okay, I'll update you guys as we go, right? Because right now I think the market is still testing lows. In terms of Feds, we'll probably just need to wait for price to start pulling back a little bit before we start, having that as a swing low established, and then the Fed comes in. All right. Lastly, here in my list, before we look at some other instruments, would be Bitcoin. Okay. So Bitcoin is currently testing the low areas. Nothing as of now, to be very honest. We want to see how price is going to react off this low. Okay. Hopefully, none of you got caught in buying this, right? I mean, it broke its previous high very briefly and then reverses very impulsively, right? Which I've been repeating quite a lot and sharing it quite a number of times, right? Don't jump into a trade just because it's moving in one particular direction. Always wait for the confirmation, right? Which means that if this is gonna break out, you always want to wait for the corrective pullback before jumping in, right? You don't want to jump in at the top. Okay, so actually the same thing is applying to it now here, right? Because price is coming down, you don't want to just jump in because it's coming down, right? If it wants to continue lower, it always will print some sort of a corrective pullback. Then only it's giving you clue it will want to go lower. Okay, so until you get that corrective move, there's nothing there, right? Because right now this is really just a V-shaped formation, right? So be patient on Bitcoin, right? So yeah, before I jump into some of the other instruments that you guys have been putting up in the chat, yeah, just want to very quickly, summarize. There are a couple of worthy ones that you definitely want to have it in your watch list this week. Okay, great. So I see over here a couple of different instruments that were put into the chat. We have Euro Yen, CAD Franc, Euro Pound, as well as Euro Odd, and the UK 100 FTSE. Okay. William here has a question as well about S&P. Are we looking to enter at a 50% mark? This one here, to be honest, I wouldn't just put the FIB immediately. Okay, I wouldn't just put the FIB like that. We would want to see price action pulling back down correctively, right? Which means, if I were to illustrate it with arrows, you want to see some sort of a corrective move. Okay, something like that, sort of this kind of pullback, right? You don't want it to be too fast. Okay, if you want some examples of what we mean by corrective, this one here, right? So you can see that's a corrective pullback. So if that develops somewhere here, I mean, on a smaller scale, that will give us the opportunity to look for the buy, right? So of course, there will be confluences where if you start to pull FIB, oftentimes the pullback on a higher time frame in sets of 3 would end off around that 50 and 618. Right, but again, the FIB itself is not the first thing, right? The FIB is some extra confluences to give us an expectation of where price would likely head towards. But what's very important is how would price be entering into our key areas, right? We want it to come down correctively. Right, so hopefully that helps. Right, so let's jump into some of the pairs here that you guys put in. The first one here is Euro Yen. Now we trading in the range of this high, this low, right? So in terms of like structural direction, there isn't much of a clarity. If you really want to squeeze something in, I would say, if this breaks this high and reverses, then short term it gives you the opportunity to, to trade it short term to the downside and then test this low. Okay? I mean, if that's something of an interest, right? And then from there, price may actually starts to go back lower, take out this low, and then start bouncing up. Okay. So obviously there are some overlapping principles between Elliott wave and the SMC model, because SMC tends to talk about swing highs and lows as liquidity, right? Elliott wave perspective tends to talk about tree wave, and of course, when we talk about tree wave here, the basic model of tree wave is like from swing high to swing low, a pullback, and then the market will come back and retest this low, right? So that's a like overlapping understanding of liquidity sweep as well, and then from there the market will bounce. So that's your tree wave structure, right? Yeah, so this is something you can look out for in terms of euro yen if you want to, but obviously from a general point of view, we are in a range bound environment, right? Which is not the best situation or scenario to be trading within. Okay, so that's my take on the euro. On the euro yen. Okay, let's take a look at CAD franc. Okay, let me erase all those that I've drawn in the past. Euro franc, first very obvious thing to note is that price is testing the low. All right. So whenever price is testing some significant highs or lows, right? You want to observe how price is testing it. Now, this is a little bit on a pattern recognition as well. If we start to see some sort of a crawl here after the test of the low, this indicate a potential reversal, right? Which you might not want to immediately jump in, but you want to wait for some sort of confirmation break. Okay, then the pullback will give you the opportunity to take it to the upside. If this is a crawl, okay. Now, if that's not a crawl, right? If what happens here is the market do a V-shaped bounce, and even that's also very, very clear, right? I mean, if it's a V-shaped bounce, you wait for the correction and then you look for the upside. Okay, now there's also the alternative where this is just going to be doing a corrective pullback. If it's a corrective pullback, this suggests more downside. Okay, so the tip here is when you see something like that, which is testing its previous lows or highs, you want to observe what's next, right? Case in point, well, I don't look at the CAD franc, right? I'm just going to give you some very, very similar one, which is crude oil. Okay, so not this. Let me just go back to that crude oil, right? So if you take a look at this here, right? This is a significant low. Price broke it. It took way longer than expected to form that pattern. Okay, but I'm not interested in trading any of this. Okay, so when the market breaks a certain highs or lows, which is significant, you just want to observe what is it developing into. Okay, so that's what I'm gonna be sharing in terms of like the CAD franc, right? So very, very good example where you just want to observe how price is gonna react at that area. Right. Next up, I see here you have euro pound, right? So I mentioned a euro pound. So euro pound, as of this pullback, is definitely corrective in nature, which means that there's a very good possibility we'll see one more push down. Okay. So this is on the higher time frame on the H4. We can already see some sort of a liquidity sweep here. This neckline has been taken out with impulsive move. All right. Of course, this is a huge fair value gap. If you start to put in your fips from swing high to swing low, right? 61.8 is around that key level. If you look into 67, it's also there. It's very, very close to its between 61 and 67 is pretty much the same area, right? So definitely that's your point of interest. If price can continue to pull back correctively, that can present some sort of a sell trade or opportunity. Okay, so that's my take on euro. But of course, this sell here is short term, right? Again, because the context of this trade here is that it's just gonna likely be something like that, right? And then after that, the market can start to bounce back up. Okay, but of course, this move here is not your primary concern because we always take one move at a time, right? Which means if this is likely gonna come down first, and then when this starts to pull back, that can be your potential to take a sell trade, right? Again, this is a potential retracement. That's it. This might continue higher after that. Okay. So very, very similar. And then of course, if you zoom in, that is your market imbalance there as well. Okay. So yeah, euro odd, pound odd, very, very similar. FTSE bullish, obviously, right? You can see that the market took out this consolidation, move up. Any sort of a pullback would be upside potential. Okay, I mean the index here in general, we are bullish, right? In terms of like S&P, the US market, right? In short, we're gonna be bullish on that. This includes, of course, your developed markets like FTSE, German DAX, and things like this. Right. Pound franc. So Irene asked about pound franc. Pound franc here is pretty straightforward as well in terms of what we are expecting. So you can see this is an impulse leg. This seems to be a short mini impulse as well. If this gives us a corrective pullback, we can expect one more push, maybe towards this area, and then we can then expect upside, right? So we expect a short-term three-way first. 1, 2, 3. Okay, so a more detailed drawing would look something like this. Right, towards the 15618, that would be your key area. Okay, and then we'll look to expect one more drop, right? Yeah, so this would then form your three-wave expectation. Okay, and of course, on the bigger scheme of things, this would be your bigger invalidation level. Right? So the forecast here, the expectation here is something like this. Okay, so short-term bearish bars on the pound franc. Okay, hopefully it's clear. Another pair here I see is Chef Yen, right? Switzerland. Yeah, I mean this is very, very similar to the pound franc in a way, okay? Where you have very, very corrective move, right? So we again expect this, right? Because the pattern structure is quite clear. We have this impulse, we have this correction, we expect this move, right? But of course, the context of this here is you can see overarching bullishness, right? This is huge bullish momentum to the upside, right? So that's where you want to understand the context of this, where this here can just be something like that. Okay, and then if you zoom back in, okay, that's what we can look to capitalize, right? So this would then be your invalidation level. Okay, you do have a fair value gap here, FVG. If you want to extend this a little bit, that's your order block as well. Okay, obviously, if you start to pull in fips, that's somewhere between the 78, right, or 67, 78, it's around there. Right, 67 is there, 78 is somewhere there, right? Yeah, so I mean, I'm not looking at everything in the market, but you know, Chef Yen here definitely presents something interesting. Pound franc as well. Pound franc here as well. Okay, so there are definitely opportunities outside of the pairs that I'm looking into, right? It's just that again, I just choose to focus on this few pairs here that I'm regularly looking into. Cool. Raphael here has asking about the euro pound. I think we did talk about euro pound as well already, right? So yeah, if you miss it, the summary of the analysis in euro pound is we're expecting something like that. Okay, which again, the context of this trade likely be something like this, where we are looking at short-term move to the downside, and then after that, potentially it might start to go up again. Cool. Right. So yeah, I hope today's session here gave you guys an overview and outlook for the week, right? Some of the things that you can look into, some of the potential trades that you want to be focusing on. And that's all from me for today's session over here, right? All the best, and we'll see you guys in next week's session. Hey, see you guys. Night.